of Research at the Bahrain Center for Strategic International and Energy Studies, and Bora Bariman, Managing Partner at the Hormuz Strait Partnerships. Thanks very much, gentlemen, for joining us. We just had the survey question that we put to our viewers yesterday up there, which was addressing the question of whether we're now very quickly switching from supply concerns to demand destruction, of course, because of the war and the forecasted possible economic consequences of that and impact on oil demand. Chris, and we see our audience was pretty split there, 50-50. So Chris, where would you have voted? I mean, are we seeing now that sort of the economic concerns of the European and global economy sort of overtaking tight supply concerns, if you like, on the oil market?
It's an interesting one, because where do you draw the line on demand destruction? Because what we're seeing at the back end of the refinery, you're seeing huge demand on diesel at the moment, and record draws on the diesel stocks in the US and certainly in Europe. So on that side, there's no destruction. On the crude demand side, yes, we are seeing Asia pull back. We're seeing the Chinese have reduced the amount of energy they're importing, including oils. They're going through a sort of a process of reassessing. We've seen Japan issue, I think it was 1.6 million barrels out of strategic reserve. US are doing the same, but on a greater scale. So I'm not seeing a demand destruction just yet. I'm seeing more supply chain disruptions as the sort of key, as far as I can see it at this stage. And I think OPEC called it right in saying, look, we know you want more barrels to bring the oil price down, but we're not seeing that demand yet. We want to see the figures. We want to see the actual throughput. So from that point of view, it's they made the right call. The oil's come down with $20 a barrel in less than a week. It's up this morning. Last time I had a look at it, was up $2. And that sort of volatility is raising a new level of concern, certainly in the producers' market, on the amount of working capital they need to manage their positions. I think it was in the news yesterday or today, Peabody being asked to put some 500 million up to cover their positions. And I expect more producers will be in the same sort of boat. They'll be going out to the markets looking for cash to cover their positions with such volatility in the market.
Okay, Amar, just to talk about that in terms of supply, we've got the UK Boris Johnson, the Prime Minister, arriving in the UAE this morning. He's already arrived, I believe. Presumably talk about a few things. One of them may be, an attempt again to try and convince UAE, Saudi, please add more oil. Is that argument getting a bit tired now, Amar, in the sense that OPEC has made its position very clear, and the market has told us that in the last week as well?
Yeah, so I think you're right. I think you have to remember that OPEC is involved a sustained period of cooperation between Saudi Arabia and Iran, which obviously have major differences geopolitically, but they cooperate fine on the oil front, and Russia included in that bargain. And I think everyone in the oil community is sick of being, or is very distrustful of world leaders from the West, who are ready to, turn against them and are constantly actually antagonizing them and cursing them and blaming them for everything that's going wrong in their own economies. And so I think they, given their track record of successful cooperation, especially since 2016, and the consistent track record of just being targeted and victimized by Western countries, they will, entertain diplomatically their requests, but ultimately they will stick together because they realize that's where their interests are better served. I don't think Johnson or Biden or any of these Western leaders particularly have any particular level of credibility when it comes to sort of quid pro quo on this issue. And a country like UAE would probably say, why should I destroy this, carefully crafted relationship with Russia and Iran and Iraq and all these other countries in exchange for some, cheap headlines from Boris Johnson?
Okay, but I mean, on that question and we won't talk about the UAE specifically, because we had obviously that headline coming out last week from their ambassador in Washington, which arguably, made the market drop a few percent, oil prices drop a few percent. But on the Russia question and the partnership there, a lot of analysts have said last week, the GCC and particularly Saudi Arabia with an OPEC and OPEC Plus is just not going to budge in terms of keeping Russia on side in the group.
Yeah.
How can they kind of maneuver with that at the same time as while this conflict goes on in the Ukraine? Is that likely at all to shift that focus?
No, I don't think so. I mean, yesterday, I think I just read a readout this morning from the King of Bahrain, had a call with Vladimir Putin yesterday, affirming, you know, the desire for a diplomatic solution to the crisis in Ukraine. And I believe, you know, that there have been similar overtures. I can't remember exactly, but certainly Saudi Arabia and Russia have remained on good terms. And I think, as I say, the West is paying the price for having highly capricious and unreliable foreign policy throughout the last 10, 15 years. And so these countries have clearly a very strong interest in maintaining good relations with Russia, especially in the oil in terms of the oil supply. And it doesn't make sense at all to jeopardize that for a crisis. I mean, it's obviously a tragic crisis, but the reality is, you know, we're talking just before the podcast started, it seems like there's a crisis coming every other minute. And although the media at the moment is fixated on the issue of Ukraine, remember in summer, we were fixated on the issue of Afghanistan. A few months earlier, we're fixated on whatever issue, and probably 2 or 3 months from now, no matter how much suffering there is among civilians, there'll probably be a fixation on something new. So it doesn't make sense strategically to respond to this, what looks like transient media pressure by, you know, sacrificing long-term strategic relationships.
Yeah, and also sacrificing the oil price long-term and risking it dropping again.
Absolutely.
Bora, just to go to you, today is probably sort of it would have been a big day, but there's so many other problems that have surfaced since then. But of course, we're expecting the Fed to confirm, you know, its first rate rise that's been sort of expected and talked about, whether that's going to be 0.25 or 0.5. But my question to you is that, you know, is that now sort of almost insignificant given the new challenge we're facing now, the sort of contagion from the Russia problem, from the Russian economy problems spreading into the global economy, these new concerns about growth this year across the board. How is that going to throw a spanner in the works on Fed policy, do you think, one way or another? Is it going to become more hawkish or less so?
Yes, certainly the role of the Fed has been complicated and will be overwhelmed by geopolitical events. You know, a few weeks ago, I would have even seen the U.S. Fed taking a belated tilt toward a more hawkish stance against inflation. But now my opinion is that 7 rate hikes that we had previously priced into the market will not materialize. I think they'll err on the side of dovishness. And
even with 8% inflation and rising.
Well, look, I can't predict how they will go, but we've seen just recently in the European Central Bank, Christine Lagarde, she looked at 6% inflation in the Eurozone and decided that negative interest rates were still appropriate. So I think that's an indication of how, let's say, Western policymakers are thinking. I don't think, you know, America needs to go negative. Certainly not. It's already, you know, an eye-watering level of liquidity being put into the markets as it is. But in the final analysis, I think we had a lot of unbalanced books around the world before Putin's war began. And now we're going to be entering a new period, as I said, of this very strong inflation. And that will bring about a necessity of a profound restructuring. That will be led by who? The US Fed, the central banks of the UK, Europe, and Japan, the IMF, and the World Bank. But those multilateral institutions will take their decisions without Russia's vote in their proceedings. Clearly, China will remain very important. and I suppose the GCC oil exporters are also watching and waiting to see what their role will be as the world is restructured. So what I mean by that is debts will be eroded by inflation, and I expect very strong inflation to proceed. I cannot imagine that under current conditions we can get the inflation genie back into the bottle.
Even yeah, exactly. Even if we do increase interest rates by 2 or 3% even throughout the year, if you like. Chris, let's just talk about that inflationary impact, and also on just not just on it's across the board, on commodities, on food, on metals, etc. Natural resources. China. Let's go back to China. You mentioned China in your opening comments about concerns of what's the demand going to look like from China this year and its impact on oil, on the oil price and oil demand. COVID policy is sort of backfiring to an extent, new concerns on COVID. And, again, supply chain issues, which have not really recovered since last year. But again, China plays a huge part in that supply chain, that global supply chains of goods. So, what's the outlook for that, and any sort of extra concerns on that front, given the challenges that China's having still?
China is a massive consumer of a lot of commodities, a lot of agri-commodities. So I believe that they're going to be struggling equally with the current crisis. They're hurting. If you think of how many barrels and how many bushels of wheat they buy with the current prices, that's going to be eating into their reserves a lot. And some of the conversations I've had around that, there is some difficult times, and they're having to look at that as far as how they're going to manage it, because their policy of common prosperity needs to go across the board, and they need to manage that to keep their population comfortable, happy, and in the lifestyle they've become accustomed to. So they're equally going to have a lot of challenges, as is the rest of the world. The lower economies are certainly going to be struggling with higher commodity prices, and it's going to be challenging times coming ahead. Because
we had there's a headline out this morning of just to kind of as on a parallel in terms of its equity markets, China committee or central bank committee saying it's come out and support equities and its stock market no matter what. We've seen a bit of a recovery there in the last day or two. I mean, is the sense that the government is going to bring up the support no matter what it takes this year to at least hit that 5.5% growth rate that they were planning to?
Well, if history is anything to go by, they've always stumped up. They've always stepped in and made sure that they've had that calmness, a certain level of calmness. There's been a couple of spikes here and there with the property crisis that they had, where they're over Greensill. And from that point of view, I think they will always step in and try and balance their economy. That's their position that they need to have, and they will continue to look further afield. I think on the plus side, they've invested a lot of money and capacity in their own refining, their own production capacity. And those countries that have chosen to follow the mantra, rightly or wrongly, for the renewable model, you've seen with 1.6 million barrels closed during the COVID process. A lot of refineries in Europe. South Africa closed 2 refineries. You've got Australia closing refineries, New Zealand. America converting a lot of refineries to bio. They must be looking at themselves and going, "Ooh, was that the right thing to do?" With the current, we're now reliant on Asia. We're now reliant on China and Russia to some, certainly in Europe, reliant on Russia for all this import. We've got a lot of nice import terminals, but we've got no capacity to produce our own product. So I think there's going to be, not just in China, but globally, a rethink of supply chains and how they're going to manage that and what they're going to do for security supply. We're seeing US and Europe looking at the chip. You think the chip supply chain issue came out of COVID, and it's still being worked on and not being resolved. So I think that those sort of supply chain discussions and reviews are going to be happening all across the various markets, cars, commodities, and agribusiness.
Omar, just to go back to supply and Iran, you mentioned it briefly. Again, we've had a few headlines on that from Russia using its leverage there in terms of the war that's happening at the moment in Ukraine. saying it might make that, as an excuse to stymie the JCPOA talks that are happening in Vienna. That was all guns blazing about a week ago, and then we kind of had a 180-degree turn. It's gone a bit quiet again. What do you think's really behind that? I mean, is it Russia again, sort of meddling, or are we just still going to see this Iran-US deal not really materialize anytime soon?
So I think it will eventually materialize. I think this morning's headlines, even in the Gulf Intelligence Daily Bulletin, indicate that America and Russia seems to resolve their differences. But I think that what it speaks to is a very sort of fundamental lack of trust in the international community in every direction. Nobody really seems to trust anyone to do anything. And to be honest, even the written guarantees being made in the JCPOA, I wouldn't be at all surprised if they get violated by someone in the next few years and so on. There's just there doesn't seem to be much of an appetite for genuine multilateralism and international law. And in many arenas, what we've seen is 20 years of violations of international law by every power under the sun have just made nobody really trust. And I think Russia maybe sensed an opportunity because they know that Biden has made a political commitment, a campaign promise to resurrecting the Iran deal. And they know the elections are coming up soon, and they thought, okay, well, let's irritate him. And perhaps that worked, but it already needs to work to disrupt and maybe get a few concessions that are favorable to Russia. But more generally, it wouldn't surprise me if the deal gets done. But even if it gets done, the reality is that the world is full of mistrust, and power politics seems to be the rule of the game now, not agreements and international law. And it's very sad and very concerning.
Okay, well, let me just get your opinion quickly on the changing politics and different sort of games being played. There was another headline this morning, Omar, on Saudi inviting President Xi from China for a visit, again saying, oh, it might consider pricing its oil in yuan, the Chinese yuan. I mean, is this just more politicking, or do you see something more fundamental there from Saudi in terms of it, the US sort of it not being in favor of the US at the moment, at least, and is it genuinely sort of reaching out to China for any other reason?
I think many countries look at how the US has responded to the Ukraine crisis, and they compare how the US has responded to the Ukraine situation with many other situations that have unfolded across the world in the last 10, 15 years. And they've been alarmed at how strong the US reaction has been to this issue compared to other issues which they regard as deserving of the US's attention and as deserving of the coverage in terms of human rights and so on and so forth. And so I think their interpretation is that the US is a bit of a how should we say, a loose cannon, and so these discussions, the one, I'm talking about 6 years old. I think they're keeping going on and off. But I think that many countries in the world see what the US has done to Russia on this occasion and said, well, okay, it's Russia may or may not have deserved it on this occasion, but for sure there are others who have been equally or less, or approximately equally deserving of such harsh measures that have not had them implemented. And so it's very difficult to predict US policy, and you could be on the receiving end of a strong lash out by US policymakers. So try to limit the fallout by doing these kind of changes.
Yeah, Bora, let's just talk about the sanctions on Russia. Obviously, there have been financial sanctions so far, and we sort of touched on how that might start to impact globally in terms of if the Russian system collapses completely. Just on the energy sanctions arguments on Russia, US has placed sanctions on them already. Arguably hasn't made a huge difference. I mean, at the end of the day, any further energy sanctions are just going to hurt Europe, aren't they? I mean, it's not going to really backfire on Russia.
Well, you can't say that Putin will come out, ahead in this game. That's for sure. But clearly, there are costs of opposing this invasion, which the costs are the sanctions that will raise the cost of living in the West and around the world. Putin has triggered a chain of events that has caused a huge disruption that will take many years to repair. It's not going to be settled in a, peace treaty in Q2 or Q3 or something like that. Definitely. And just looking at the financial damage, the chaos is everywhere. I don't see Russia coming out on top in any way, shape, or form, but the West is not unscathed either, obviously. Big names like BlackRock with 17 billion in Russia-related write-offs, and the Western aircraft leasing companies with 12 billion of their assets likely to be nationalized by Putin and written off, certainly.
What about energy companies? What about the IOCs who've already started to declare they're going to withdraw their equity? But where do you see that going?
Yeah, and that immediately writes down, the value of debts and assets of these companies, whether Putin nationalizes them or not, right? The assets will be there; they'll be ready to produce, but they will be unlinked to the West. That is a cost and a loss to the West, and that is, you could say, I don't think it's a gain for Russia. Remember, there was a Soviet Union that didn't trade with the West. They had lots of free gas, free oil for their people. They all lived very warm lives, but they just didn't go shopping, leaving their country. They couldn't quit their jobs as they wished. They were directed to employment through the state-directed economy, which is perhaps a solution for Putin. He will get increasingly closer to China, and that will be an important bloc. If he survives, I don't think he should, because these people who are around him, if they had any backbone, they will have realized that they've been guided into a quagmire.
But what about, so from a China point of view, though, I mean, again, China has a lot to lose if it really does side openly. I mean, obviously, there's a relationship there with Putin, but at the end of the day, could it take a definitive step to support him? And a much bigger loss for China there than Russia.
Look, I think the kind of sentiments that come from people like Omar and in the Middle East are appropriate, right? They're just sort of watching on the sidelines because there's a world war going on, actually. Don't jump into it until you see which side is going to be victorious. I have my thoughts about which side that will be. I don't think it will be Putin, but certainly China is on the sidelines now, right? And they will be ready to pick up the pieces. The Middle Eastern,
they're in a much stronger position.
Yeah, the Middle Eastern countries are right to, accept yuan, which will be appreciating, right, going forward, especially if Russia is directing their energy supplies toward China. China will not be experiencing the inflation that the West will be experiencing in relative terms. There may be some inflation, but relatively they'll be getting discounted energy. And clearly,
so we could be moving currencies then in terms of how currencies and how oil and commodities are priced. Chris, I wanted to go to you just on the question of U.S. energy supplies and shale. We'll just look at our poll there. The Fed will surprise markets today with more hawkish policy outlook for the rest of the year. So again, today's news will be minimal in terms of we already know what's going to happen. But as I was saying to Bora at the beginning, how is the outlook for the remainder of the year changed, if anything, by the situation we're seeing in Europe today? Bora says it's going to be bearish and more dovish in terms of Fed policy. Others would argue not, perhaps, in terms of inflationary concerns. Chris, just to go back to you on this, just sticking to sort of Russian energy and energy supply, the US finally, production and numbers are sort of climbing up in terms of US shale figures. We had a story on our bulletin today about that as well. Again, what's the thinking, do you think, around how much of a push that could get, considering the concerns in Europe over energy supplies? Is that going to put the US at the forefront once again, quicker than expected?
I think US shale producers have learned from the drill baby drill era, no matter what the cost, no matter what it is. And you've got a lot more mature companies in there that are capital conscious, working capital and capex conscious. I believe what they've been looking at, a lot of them, are we having sustained high prices in oil? Because the last thing you want to do is invest in oil well and suddenly the prices fall down again. And this is what they've been waiting for. Somewhere they can put a hedge in their position with the equity funds, with the investors, with the banking community, and say, okay, we can now hedge at this level and start to get true value of our assets rather than taking a speculative, because that speculative positions have long gone with energy prices, and particularly when it comes to shale and the investment to shale. So now what we're seeing is we've had the sustained period of high oil price. There is even more potential for prices to go up for US. Remember, US WTI price is trading quite well, quite high. There is a bit of a steep backwardation of that. But compared to Russia, and I'm just looking at Ted's comment on the sideline there, where Russian crude is trading at a discount of $33 to Brent. So they're not getting the full benefit of the current oil markets. But you certainly, your shale producers who are what kind of $5-6 less shipping costs and some, depending on what crude they're pumping, but we'll see a gradual increase, I believe, a controlled, sustained push to increase, as well as then we've talked about Iran, we've talked about Venezuela. There is ongoing conversations around seeing whether they can unlock those through diplomatic means. So I believe that.
Yeah, just to go back just to sort of go back to Europe a little bit, just to get your thoughts on gas and gas prices in Europe. Obviously, not just for Europe, but for the world. Gas prices again, had been calming down just before this conflict, and again up we go. How quickly do you think that contagion will spread into the economies of Europe in terms of causing, a recession?
Causing recession. I was about to say it's already there. Gas power prices are already there, hitting high energy consumption. You're looking at some of the car manufacturers looking at alternative locations, not just because of the Ukraine crisis, but also the high energy costs in Europe, driven by a number of factors: high CO2 price, high gas price, high oil price, taxes. So it's already in play. It's already hitting moms and dads. It's hitting the industry. So it will play into the economy and drive inflation, and naturally, and plus high prices are required to drive the energy change, to justify the cost of renewables, because renewables without subsidies won't compete cost effectively, never mind the sort of fuel and the pollution side of it, but economically it won't compete without high energy prices. And then from the producers, consumers, the big producers, the big consumers, the energy companies that are consuming oil and gas and power, their hedging positions I mentioned in the opening. I'd be watching them at the moment because they're going to have calls on their hedges. And that's, I think we're in for a few surprises coming in the next couple of months as those positions, and I'm not talking just about month ahead trading positions, I'm talking about long-term positions around power stations, around supply of power stations and offtake of power stations, where they've hedged those positions. You're going to have margin calls. And I expect that that may lead to some very interesting times in Europe, across the world, not just in Europe, but across the world.
Irene, if we could just have the survey answer again up, if you've already put it up earlier, I may have missed it. 62%, the Fed will surprise markets with more hawkish policy. Okay, agree, 62%. Bora, I'm going to go to you on that, maybe for the last word. You seem to be indicating the opposite earlier on in our conversation. 62% of voters think they're going to be more hawkish, presumably because of concerns on all this inflation. What are your expectations today? Do you think we'll even get the 0.25 or the 0.5 from them? And will we get an indication do you think they'll be as transparent to show what the intentions are for the rest of the year, or are we going to still have it playing month by month like OPEC is?
See, well, at the end of the day, I think we'll have a early 80s type situation at one point or another. To put the inflation genie back in the bottle, there will need to be a very hawkish, tight policy, which will cause a very painful global recession. You could say, under current conditions, we are having a real world recession already, because if the growth is 1 or 2% and the inflation is 7%, you're negative. Your real standard of living is negative. So that's why I believe that perhaps now is not the time to, take those harsh measures. But I could be wrong, and the listeners voted, the Fed might decide, let's bite the bullet today. But at some point, it is a step that needs to be taken. But it's not just 0.5% or something like that. We really need to go up early 80s style, probably above 5, 6, 7% to really.
And one would have to wonder why they would even in their right mind do that, specifically following 2 years of being the complete opposite, obviously. But as you said, enough of a challenge already for the contagion that's sort of spreading through the global economy from the Russia war. I will let you have one more word, but very quickly, please, just on the GCC sort of budget situation. Clearly, very healthy oil revenues so far this year and last year as well. Again, any thoughts on how that might influence OPEC policy at all, or they're going to stick to their guns? I mean, in terms of doing anything that might jeopardize very comfortable prices.
If they're smart, they won't do anything. They'll stay, because the whole point of OPEC, at least in the modern incarnation of OPEC, is to try to get rid of spikes and troughs in oil prices. And the way you do that is by having a long-term strategy and trying to manage and avoid gyrations in output and destabilizing demand. And I think there's OPEC does certain things very badly, but one of the things it has been doing well of late is judging demand and judging supply situations, and I think they'll continue to do that, and they won't be wooed by or they won't be tricked by temporary budget surpluses and so on and so forth. They seem to have a mature and sophisticated decision-making system. And
of course, at the moment, they don't really have too much of an option to change that supply in terms of the immediate term. So I suppose that makes it a bit easier to stick to their guns. Well, thank you very much, gentlemen. We've run out of time. Thank you to our viewers. Thank you to Omar and Chris and Bora for joining us today. And have a good remainder Wednesday. And we'll see you all tomorrow morning. Thank you very much.
Thank you very much.
Thanks, Diala.